All right, let's do our calls of the day. We're going to start with Home Depot today. It was upgraded to a buy at D.A. Davidson. They lay out several reasons to buy the stock, Carrie, which you own. Now, first of all, it's the worst Dow performer a day ago. So they're taking advantage, perhaps, of
Thank you
that.
for saying that twice.
Pullback. I just want to underscore it. Price target to $395. So they say existing home prices are at an all-time high and accelerating. It's getting closer to a lower rate environment, which would be better for them.
Yeah, of course.
Industry trends and therefore comps are no longer getting worse. Once again, widening the margin gap and share gain potential as HD expands their market. Are they right?
Yeah, we would say yes, they are. So what's happened over the last 2 years is after the enormous boom from COVID, there was sort of too much goods and too much restoration and renovation in people's homes, and everyone started to travel and spend money on services and not goods. And that has hurt Home Depot. We've gotten to a point now where the comps were negative and sales have been weak, but now there's deferred maintenance on homes. People are starting to spend more money again, and if that, in addition to interest rates sort of peaking and coming down, we think together means that the sales and the earnings will start to recover. And the market has lost confidence, which is what the stock shows you, but we think that that's going to change now.
Okay, there's that stock. It's at the highs of the session, getting a little bit back from yesterday's decline. Accenture, Joe, downgraded to equal weight from overweight Morgan Stanley. Price target does get cut to 300 from 382. So they got over their skis a little bit on this one in terms of the price target. What about now?
I agree with this call. Negative momentum for sure, and let's be clear. We own it in Joe Tate, but the negative momentum is in place, and it's a classic example of a deceleration in IT spending in areas of technology that's not focused specifically on advancing the innovation towards generative AI.
You have a rebalance coming up.
Rebalance at the end of July, but IT consulting and services right now is not where you're going to see companies spending significant amount of money. In addition, the company is somewhat challenged, and I think Morgan Stanley mentions this in a note, with their growth in the cloud business itself. So a little bit of a lift last week on earnings. It's really fallen back from the first day post-release. Stock is in perilous position.
What about Shopify, which gets added to the focus list at Citi? They're on the right side of AI.
Well,
what do you think about that?
They're on the right side of AI, but the actual revenue contribution is something that is not going to be seen for multiple quarters. They'll get there ultimately. Again, this is another example of a stock that peaked earlier in the year and has struggled to maintain the momentum that it had at that point. I'm not particularly excited about this one. And again, we own this as well.
Okay, so Blackstone gets added as a new position in Morgan Stanley's global dividend model, like their model, part of their model portfolio, which we talked a lot about last week. You own the stock.
Yeah.
What do you make of this move?
Yeah, it's also a good time here for Blackstone. If you think about what really drives their growth, and much of it is realization on their private equity portfolio, there's been very little selling among those PE funds. And we think that's going to start to change. So 2025 should be a year that we see more realizations, particularly if interest rates start to come down. But even if they don't, it's time that these funds have to start selling. And buyers are out there looking.
Is now the time to buy Caterpillar, Joe, as Citi says it is? They initiate their position with a buy. The price target's 380. Quote, solid exposure to secular tailwinds.
Where are the secular tailwinds? I'm not so sure in the industrial space right now. You really need non-residential construction machinery to have some form of growth. If you look at ag equipment, there's been a precipitous decline in that growth. And the expectation is as you turn the calendar to 2025, it gets even more challenging. Pull up Deere if you could for a second. Let's see a chart of that over the last year. And that was a favorite name. I owned it. Steve, I think you owned it at one point. It was a very popular name. But the ag equipment cycle clearly is in a downturn. You could look at Caterpillar and you could say, okay, from a technical formation, it's right above the 200-day moving average. So I have point of reference. I don't disagree with that premise at all. But you need something here in the earnings to really present itself that revenue acceleration is ahead here in the coming quarters.